And I have another gentleman who said that the S&Ps would not top before his next appearance. Right, Arno? And
That's correct.
all right, and here we are. Was your scheduled interview a week late for that prediction, or do we have more to go? Oh, here we go. There's the picture. All right. So great to have you back. Arno has been spot on about
Thank you.
what's been happening in the S&Ps. He's been sanguine for a long time, and looks like he has some interesting counts here. So
Thank you.
go ahead, buddy.
All right. Yeah. So, we always want to go back a little bit to where we were. And this was from our interview in November. I pulled it up. And I think it said here in the headlines that I was looking for a wave four pullback and then expected 6,200 by the spring. And that's pretty much what we got. We were looking for a C wave higher, as you can see, to about 60, 61, and then a pullback to about 57, 27, ideally, right? These are just all ideal numbers. The market, of course, deviates a little bit from it. And then a final rally to that 62, 6,300 level by the spring of this year. So that was November. And what did we get? Well, we got a top here in December at 60.99. So that's not too far off of the 60.69. And then this pullback here to 57.50, somewhere around there it was. So that got awfully close, right? So this is what
Yeah.
we were expecting. I mean, this is very, of course, stylized, sterile way of looking at the market, these arrows. There's, of course, a lot of daily variation and weekly variation that we simply cannot forecast, right? This arrow here in red from November.
Especially now, right? Arno, with
Oh, especially
the
now.
news flow. Yeah.
Yeah. So this is just, exemplified with one red arrow, but you can see the up and downs that are going on, which are really difficult. By the time you're somewhere here late December, the market could have bottomed. It decided to do it what we call a double zigzag in Elliott wave terms. So you got the A, the B, and then another ABC. You might also call it a WXY. Very complicated, but the general path and trend is still there. And then we were looking for this rally here. Now the question is, did we already top quite shy of that 62, 6,300 level that we already pointed out?
We got the
Because
1.5 close, right?
yeah, 6150 or something right there.
Yeah. Yeah.
6147, whatever exact number is. So it fell a little bit shy. So that gives me pause for the bears if that's the case. We did reach the numbers within an ending diagonal. So our thought since the August 2024 low is that this is a ending diagonal fifth wave. So if we go to the Elliott wave, this is my website, intelligentinvesting.market, and you would go on, click on menu, and then you go to education, and you click on the Elliott wave principle. It will pull up the Elliott wave. That's primarily what we use.
I love ending diagonals. It's my favorite. It's my favorite Elliott pattern
It's my worst.
because it's a turning point.
It is. It absolutely is a turning point. So this is then here the August low on the left-hand side, and we think we've just completed this wave three here and wave four. Of course, again, this is very stylized. This is very idealized, and all the daily scribbles, of course, make it look a lot worse. So we're in this wave four. Now, this wave four can make many twists and turns and patterns, but that's what we think. And that we are now in this last final fifth wave. And as you can see from ending diagonal, it's all ABCs, ABC, ABC, which makes it very complex to trade. But normally the third wave tags the 123.6% extension, which is where we got pretty close, maybe a little hard to see here, which is the 60.69. I think we got 60.99, so that's awfully close. And then the fourth wave tends to go to somewhere between the 76.4 and the 61.8, and that's exactly what we got. And then the fifth wave tends to go to
So
at least
is your contention that yesterday's low after that big sell-off
yeah.
is two of three? It
Um,
completed.
it could be. Yeah, that's the
And
example
now
I'm
we're on
showing
our
here.
way up, and now we're on our way up to three of C,
It's
which is
very
fine.
possible if, yeah, if yesterday's low holds, then this wave 2/B is complete. We don't know yet if this red wave 5 will subdivide further into 5 waves. It's possible. An ending diagonal doesn't have to be all ABCs. I've seen some very weird diagonals out there that's a combo of 5s and 3s. But if yesterday's low doesn't hold, we will revisit probably the low 5800s, potentially revisit the January low for a more complex wave 4, which I've shown here. Then this red wave 4 has turned into what we call a flat, which is quite common. I'm pretty sure you're aware of that, Dale.
Okay. Yeah.
I was just listening in before my interview here that you know your Elliott wave stuff. So this would then be what we call a flat, and this would then be of the irregular version. So these are all the flat types. There are. It's on my website, and the question always is it going to be regular, irregular, running, expanded, and any combination thereof. And this seems to be irregular because the B wave went then above the top of the third wave, and then we don't know if the C wave is going to go below A or not. You know, we can't predict the future, so we have to see if it's going to be running or expanded. I have labeled it here as a 1 and 2, which is just exemplary. Here's 3 and 4, right? So we've done the A, the B, we've done the A and the B, because this still counts best as 3 waves up. I cannot make this into anything else but 3 waves, A, B, C. And that's the problem with diagonals as well. They're ABCs. So it's all ABCs. Just like this whole rally here from September into December was 3s, ABC. It's ABC, and then an AB, and then another ABC. So it's very complicated.
Does that smack of distribution, even though we could have one more hurrah, that what's been going on since December? And, you know, even at new highs, maybe there'll be a lot of Mag 7s that don't make new highs, and certain groups that were favored will put in failing rallies.
Absolutely. This is like a market that's being dragged by its neck higher. And it means that the big boys are selling into it because they got the volume to make that distribution happen. And this is really being just dragged along like I really don't want to. And a good way to see that is if you look at, let's see here, the AD line. So this is the AD line for the S&P 500. And you can see it hasn't made a new high since November. And that's a bearish divergence. And that's one of the causes of the current decline, that we went higher, but due to this distribution, more and more stocks are not advancing anymore, right? You can see this is the cumulative advanced declining line. And if that one stops making new highs, whereas the market goes higher, we call this that negative divergence. And it's worrisome for the longer trend. Now, interestingly, yesterday, the AD line went higher. It's just one data blip, while the market went lower. So we have some internal strength yesterday. That's quite interesting. Some other breadth indicators were also up yesterday. So even though the market was down, internally, it didn't do too bad. And as you can see, it's not too far off, actually, from its highs. Even though the market has declined here in blue, the AD line is not doing too bad.
Yeah, true.
But as long as it stays below the November low, we have this long-term negative divergence. And why is that important? If I go back all the way to the 1920s, all bear markets, every single one of them since the 1920s, has been foretold by negative divergence in the AD line. So this is the NYAD. I just showed the SPX AD. I just have longer data for the AD line for the NYAD. So then we plot the Dow Jones, which is more broad related. And you can see the 2008 crash foretold with months of negative divergence. Sometimes it takes years, like here in the 60s. It takes years. But these were not run-of-the-mill corrections in the 70s. These were 50, 40%, bear markets.
I think I remember.
I don't.
You were quick to say that. All right. Really, the key, and it's really going to be screaming at us, is if we go to your target, was it 6250?
Yes.
And the AD line at that point is not making the new high.
Correct.
That's really going to be a problem.
That's going to be concerning. Yes, because then bigger picture wise, we're running into a much larger top. And again, yeah, past performance is never a guarantee of future results. But if we've had over 100 years of data that every time tells us if we get this divergence, we'll get a severe bear market, we have to assume that's going to happen next. And then we apply, of course, the Elliott wave to see if that's possible, right? If you apply the Elliott waves, and we go, yeah, that is possible to happen. Also here you see 62.50 is still not really reached. It doesn't have to, of course, the market doesn't have to reach it. The price will tell us. So that's why we use for our premium members these warning levels. We say, all right, all the Elliott wave aside, it's really great if you anticipate another wave, but the market will tell us if we're going to get that other wave higher, yes or no. And by no, we mean if it starts breaking below key price levels, then it starts invalidating at some point the possibility of going higher. And of course, vice versa, it invalidates the possibility of going lower. So this is one way of looking at the rally since 2020. We can also find another way, which I start to like more and more, of the Dow Jones, which suggests we'll see indeed a larger top, but it's only going to be a third wave. We see a pretty severe fourth wave akin to 2022, and then still a massive final fifth wave. So it takes a lot before we can say the top is in. But yes, we do have to monitor for this AD line, because the more it starts diverging, the worse it's going to get into the future. But again, it might take a while here. It started here in 1956. It lasted till 1966 before we saw some serious pullbacks. And even within those pullbacks, the Dow Jones still managed to make in between new all-time highs. So it can be tough. But of course, the general return, of course, was pretty dismal here for about 10, 15 years.
Yeah. Yeah.
So those are the two things we're looking at. Let's see here. So that's that one. And yeah, this is the final one that we indeed topped for wave 5. But again, it's very short of what we expected to do, since especially the third wave and the fourth wave did what they were expecting to do, meaning they topped and bottomed pretty much at the right Fibonacci extensions. And then we also expect that for the fifth wave to do. But if the market decides not to, for whatever reason, then that's what it is. So we have placed the warning levels for the bears here on the chart. So this is, of course, a bearish chart because we have wave 5 in this possibility completed. But if you go above the all-time high, which was only made 5 days ago, by the way. So a lot of people are extremely bearish. But we were only topped 5 days ago. So everybody was already screaming bear market. Wow, we're out real early. It's real early. And
I
normally
you have a box up there up at 6,400.
Yeah, it can go even to 6,400. Of course, we can always get a wave extension, right? So I would probably make that box a little bigger. So this is
you think we're done by April?
Well, let me pull that one up for you. First and foremost, look at this, the fear and greed. It's a 22. 5 days ago, we topped at the all-time high. Excuse me? That's a little extreme. And most of the time when there's extreme fear, start buying. Let's see, when could we expect a... let's see if I can find that chart. Well, I can actually post it here, show it here. Yesterday, I posted on my X handle, whatever you call it.
Yeah, everyone write down his X handle, or knows that Intel.
Yeah, at Intel Invest.
Yeah.
Thank you. So this is seasonality on average. And you can see it's pretty bearish in February. So the top part is all post-election years for the United States. So it's pretty bearish in February. That's so far so good. And this is just all years in the bottom line, all years, including all election years, post-election years, whatever, all 97 years on average. So also here, pretty bearish into end of February, and then pretty bullish into August, with, of course, the usual sell in May, right? A dip. And also here, in post-election years, which we're currently at, it's pretty bearish in end of February, and then pretty bullish into July, with, again, a little bit of bearishness here in March, April. But to be determined, it's an average. It's just an average. It hasn't really worked much, I must say, over the last 6-7 months. So it's just an average. I wouldn't hang my hat on it, but currently we're following this seasonal pattern quite well. So hopefully it's going to follow along, which would match with this Elliott wave count that we're tracking, and that we're going to see still this fifth wave rally.
Okay. Maybe it kicks off in the video.
It could very well be. Yes, absolutely. Again, sentiment is of course extremely bearish. It doesn't get much more bearish than this. 5 days after all-time high. Some short-term indicators here are getting quite oversold. Every time this indicator, it's following, it's called PMO buy all, gets to zero or close there too. You can see we get very good buy signals. And it's been on the sell since early February, a little bit early, because of course we made a first new all-time high. Kind of stalled out here, but it's getting close to zero. I want to see it in the 0 to 5 box. And then every time that happens, you get very good buy signals once it starts going back up again. And with, of course, this extreme fear and a quite good seasonality ahead of us, and an Elliott wave count that suggests we might be completing either a larger fourth wave or within the midst of that fifth wave here. I think we should start to look soon higher again. That's my idea.
Do you think that this wave will take us out of extreme greed to extreme optimism, or just make it neutral? Because you would think that a lot of major tops would be euphoric.
Yes. Yeah, you'd think so. Yeah, I think it will stay nicely bullish. Extreme greed, sure. I can't predict the future, but that tends to happen. Let's see here. Where was it? A year ago was, even a month ago, we were at fear. A year ago, we were at greed. And where were we a year ago? February. Let's zoom out. That's about right. We were here. This was greed. And you can see it can still last a while before you see a correction. So that's it's most of the time it's like the VIX. The VIX, the volatility index, is much better at the foretelling of bottoms. Right, really spikes. Those are like singular events. Tops take time, and sentiment can therefore stay often bullish quite long. But bottoms are really single events. There's just too much greed, of fear in this case.
And another I've noticed with VIX is, when it's down and it's, we've just had a rally, when you start to see it with the market higher, putting in little gap higher openings.
Yeah.
It's really been a nice advanced tell. We had that this time too. Before the sell-off, we had a little gap up and the market wasn't lower, but people were starting to buy that protection. So it's actually turning into a good tell when you see that stuff. So the VIX is not dead or broken. You can still use it.
Oh, no. No, of course not. No, it just behaves the way that
let me ask you this. So after, let's just move forward in time, and we complete between 2.5 and 4. What would you be looking for in the next 6 to 12 months after a top? A crash?
Oh, after that?
A crash?
Yeah, I think, yes. Either we have topped majorly for a huge bull cycle, like that. So then we're probably going to go back to, I would say, probably the 2020 lows, somewhere around there. Wow. Yeah, that's going to be because this will then be akin to the degree that I showed you here in the 1930s. So then we've completed the whole rally that started in 1932. So that was a super cycle too low, and we'll see something similar. But this was, I would say, a zigzag, and I think we're going to see something akin to what we saw in the 70s, like this up and down path of a very large super cycle fourth wave, which can again last a decade with big drops, big rallies, big drops, big rallies. And maybe that fits kind of where we currently are in the market, political and
Yeah.
geopolitical environment we're currently in, and kind of heading towards this talk war between left and right, and I don't know who's in charge and who's not in charge, and nobody wants to participate with anybody because everybody else is stupid except us. So all that stuff.
I was thinking there is kind of a megaphone formation if you go back for a while. I came up with a megaphone. In fact,
Okay,
I know it's your interview, but I would like your opinion on something. Do you mind if
of
I
course.
share, if I just share it and
Please,
because
please.
isn't a megaphone like a classic example for a market that has those kind of swings like you're showing in the 70s? You have a
Yes.
little bit of that. In fact, that is a megaphone. So
Yes, correct.
people get bullish at the top and bearish at the bottom, and
Yes.
it's and our president, God, does he loves a megaphone. So it could be a great
Yes.
it could be a great formation for what's ahead, a megaphone top. So uh, anyway, let me see if I could just share that. I'd like your view on it because this is what I was thinking a while ago. Just go to here, go to here, and then go to here, and then go to okay. So there's the week. Okay, so this to me is a megaphone formation. We didn't get to the top. The top's probably up near 6,400 if we're going to go there. But here's the
Uh-huh.
bottom. Here's the bottom of the megaphone. That would be wave 4 of less degree. A lot of confluence with moving averages coming in there and long-term trend lines. That we
Yeah.
could actually have a sell-off to here and then go to 7,200.
It's yeah, that's definitely possible.
I mean,
Um,
does that broadening top make sense to you?
yes, it does. Yeah, I like it. I like the whole idea. Again, we can't predict the future, but that certainly makes sense from a fourth wave perspective that tend to have these megaphone broadening tops. Um, the same you could almost see here in the early 2000s. This pattern here was kind of like a
Yeah,
megaphone pattern
it
as well.
was.
And that
Yeah,
was also again a fourth wave. And second waves tend to be quite deep and steep and fast, and the fourth waves tend to be this distribution pattern, as you can call it, wide, and a lot of confusion
yeah,
going on, and a
right.
lot of counter economic streams. One thing is going great, and the other thing is
Yeah,
not going well. So
right.
yeah, that's definitely
Everything's
very
great, and now there's a virus. Everything's
yes.
great. I've noticed one of the strongest groups, and maybe we'll wrap it. It's been the financials, okay? And it's always been my contention if we have a bear market between commercial real estate and what's happening even in residential and the bond books that all
Uh-huh.
these guys have long duration, that a problem's going to show up in banks. And
Yes.
that may be the leading thing. So they actually, a few of them, like B of A, looks like, they're in topping patterns now.
Aha. Okay. Yeah, I haven't looked at the
So
banks in a while. I should,
yeah,
but
yeah,
there's
check them out.
so much to cover. And
I
so little
know, I
time.
know.
So much to
It's all,
cover.
I think we have things pretty cased. Uh, you know, uh, you made a great call.
Thank
And
you.
I think by next time you and I talk, we will have gotten to that 62 to 65 if we don't collapse here. And
I think so too. I hope so. Again, where you say, well, November we're going to top here, and then later on bottom out there, and then rally there. And if that's happened, but we haven't gotten to that rally yet, you kind of still
right,
sitting and waiting for it, right? That's what
yeah,
we're doing.
yeah,
But the
we're
market is taking its sweet time for sure. And this whole thing here, however I slice and dice, it looks more corrective than anything else. It looks almost more like, maybe some people would call it at some point a bull flag, something like that.
uh, cup and
But
handle.
cup and handle. But in the end, I will throw in the towel and sign off with defeat if indeed the market just drops below key price levels. In this case,
Yeah,
we have to drop all the way below the September low here at 53.97 ish to tell me
Okay.
that, okay, we're
It's
done. So
over.
it's over.
Yeah.
With of course already severe warnings if we start go below the January 13 low and some other things. But so that we've got some wiggle room. That
Okay.
doesn't mean you should just sit on your hands and wait for that to happen. I still think you should take some appropriate action if we start seeing things drop lower and lower and lower. But
I like
that's
where you
also
have two B. I like where you have 2B there, Arno. It
yeah.
looks like mid-March to complete this before we rally. That's like we're going to have a retrace and then another break.
Yeah,
Okay.
it's very possible. Even that would fit with the seasonality I just shared, right? So you get this rally here, the B wave, and then the final C wave. It would match. We can make that
Yeah.
happen, right?
And you know what
We can
else
make
it
that
lines
happen.
up with? We're entering eclipse season, and I know it's not your cup of tea, but
Oh, okay.
we have a lunar eclipse March 14th. So I'm just getting a lunatic vibe that could be a turning point. So, and then we have a solar eclipse at the end of the month,
Oh,
and we have a
wow.
change of seasons, 21st.
Correct.
So
Correct.
a lot of stuff happening this month.
Yeah, no, and it all matters. All of it matters. I just saw a post where there's some planetary alignment coming up. That's not going to happen until 2040. All those things matter. They do. Some matter more than others. But I think I don't laugh at any of those. I laugh, but
Yeah,
it all matters because it does influence people's mood, and that influences their
yeah.
decisions they make in the financial market. So for sure,
Okay. Well, I'm
yeah.
in a, I'm in a good mood today
Yeah, same here.
because I got to talk to you. I always look forward to it, Arno.
Thank you.
And how do people get involved with you?
They can just contact me through our website, and we're at intelligentinvesting.market. And there's many services that we provide. And you can just click on the menu, for example, click on any membership you'd like, either what we just talked about, stock market forecasting. We do the same thing for cryptocurrencies, Bitcoin and Ethereum primarily. You can sign up for where you get just daily emails about trading alerts for ETFs or the Magnificent Seven, crypto trading alerts, many ways. Just sign up. You get a 1 month trial, 50% off. Don't like it, cancel it. It's all good. If most people do like it, stay with it for a long time. I've had members now for 10 years since I've been doing this.
That's
So that's
great
a
retention in this
yeah, great
business.
retention. You always have revolving door. People
Oh
that
yeah,
think
well the
that's fine.
people looking for the Holy Grail.
Yeah, well, sorry, it's not there.
Anyway, yeah, or the secret. The
Yes, the
secret to
secret.
trading. You know what I think the secret is, don't you, buddy? There is no secret. It's hard
Yes,
work and living through adversity. And
yes,
if
it
that
is.
scares you, do something else. That's what I tell
Please,
people.
please, yes,
Yeah.
yes.
Get
I
get
wish I knew everything
get a
beforehand.
government job. Oh no,
Yeah,
they don't have any anymore.
no,
Well,
right.
yeah, anyway, be a headhunter.
There you go.
Hey, let me ask you, wrap it with this. Do you think AI is going to replace guys like us?
Oh boy, I've got that question a lot. No, I don't think so. I think at some
Okay.
point the human factor is still very important.
All right. Well, that's good. I didn't think that, they, well, they could clone me or do a
I
hologram
think
of
we
me.
can work
AI.
together really well. The AI and humans can work together really well. I think that would be ultimate symbiosis. But just humans, no, we do need AI at some point. That's going to be inevitable. But only AI, what are we going to do? Nothing. I don't.
Yeah. Yeah.
Yeah.
All right. Well, Arno, I hope 2025 is your best year yet.
Oh, thank you.
And,
Likewise.
and not only in the markets, in life.
Thank you. Likewise. Yeah, that'd be great. I'm looking forward to it. It went fast so far the first 2 months. Boy, they flew by, didn't
Yeah.
they?
I'll see you in May, bro.
Sounds good. See you, May.
All right. Arno Tersher at Intel underscore investing. And there's plenty of intel to gather with his work, in my view. Check him out. Check Arno out. Thank you, buddy. My trading warrior brother, Arno Tersher. Everyone, remember, don't just count your pips, count your blessings. I'll be back with you guys tomorrow. And good hunting the rest of the day. People are thanking you, Arno. and you could join the team in 14 minutes on the
Thank you.
morning edge. Find your edge, everybody. And it's not going to be one of those razors with 4 or 5 blades in it that don't work anyway. Anyway, adios, everyone. Thanks again, Arnout. See you, buddy.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.